This week's US CQM forecast alert is the Fed's 25 basis point rate cut was insufficient. A 50 basis point cut was warranted. The focus of this week's economic forecast was on the magnitude of the interest rate cut. The Federal Reserve opted for the most cautious approach, reducing the policy rate by 25 basis points. This week, the economic growth rate for 2025 Q3 was slightly revised upwards on both the expenditure and income sides. But the gradual downward trend continues, with the average economic growth rate on both sides remaining below 1%. The growth rate of real final sales, which is an important indicator for sustainable economic growth, was minus 0.26%, suggesting a pessimistic outlook for future economic growth. The projected economic growth rate for 2025 Q4 is around 0.5% on both the expenditure and income side. The economic slowdown is clearly evident. Regarding inflation in 2025 Q3, while all inflation indicators were revised upward this week, and the GDP price deflator slightly exceeded 3%, we can still consider inflation to be stable within the range of 2.5% to 3.0%. Regarding inflation in 2025 Q4, all inflation indicators are projected to be around 2.5%. The peak of inflation appears to be in 2025 Q3. Conclusion from this week's US CQM forecast alert. The first, despite clear signs of economic slowdown and inflation having peaked, the Federal Reserve adopted a highly cautious stance, limiting the interest rate cut to only 25 basis points. The second, problems with the 25 basis point cut. A. The Fed signaled that it might still overemphasize inflation concerns, potentially damping investor sentiment. B. Small incremental cuts risk undermining the Fed credibility and reduce flexibility. A single larger 50 basis point cut would have sent a stronger signal of support and possibly limited the need for additional future reductions. The third, in the current economic situation, a 50 basis point cut combined with flexible, data-driven future action would have been optimal. This approach would A. Signal clear support to consumers and businesses. B. Stimulate housing and capital investment through lower long-term rates. C. Ease dollar appreciation and improve export conditions. The fourth, the housing market in particular is highly sensitive to interest rate changes, and a mere 25 basis point cut is unlikely to meaningfully boost activity. This slide contains additional information about this week's detailed CQM forecast.